Um, Hello, everyone. I guess we might as well kick it off here. And thank you for everyone who's attending today's session. We're obviously, it's mid of summer and very hot out here where we are in Toronto. And I'm sure it's you guys are very busy. And so we're happy that you guys could be here with us today. RBC is joining us today to talk about some practical tools that you can use out in the field. And I think that at IDC, every one of these sessions that we hold, we always try and give you something that you can take into the street immediately, right after the phone call or right after the webinar, and actually use in the field with your clients. Obviously, you have clients, and we're always looking for opportunities to work with the next generation, i.e. students. So this is, again, another piece that is going to fit within your puzzle, looking at the student savings program that RBC offers. I'm sure some of you have had experiences with other seminars over the years and had looked at some of the other carriers or products. You're going to learn about some of the unique features that RBC offers on their disability programs versus some of the other carriers. We obviously know that disability is a very important part of the insurance planning that we all hold near and dear. But sometimes I think that we find it a little bit confusing. So therefore, I guess some of the times it might be one of the products that gets overlooked most. They say that only 10% of advisors actually sell disability insurance. So that means, it should scream opportunities to all of us, because that means that obviously if only 10% are, that means 90% are not. So that's a great opportunity for us. When we looked at some of the opportunities here, and I just, stole just before we jumped onto the call, RBC has some excellent marketing material that not only for this offering, but also if you're looking at some of the other programs too as well. And, ideally, I figured if we were looking at a student, that would be someone within that age 25, age 25. If those incomes coming in, let's say a first-year associate lawyer or a doctor or a dentist or an accountant or what have you, I don't think $72,000 is that big of an ask for somebody coming out after that many years of schooling. So I just did a little quick thing here. At age 25, $72,000. And based on this chart that RBC is going to provide you with, assuming only a 2.5% increase each year, the total lost unearned revenue for that individual, should they be facing a long-term disability, was $4.8 million. And I just thought to myself, that is such a gigantic number. It's part of the planning that should not be overlooked. And I think that once you take away some of the things that Lucy and Manpreet are going to deal with us today on or discuss with us, I really don't think that we'll have very many excuses after this call. So Lucy, of course, is a living benefit wholesaler with RBC Insurance. She's been with the company, I believe, since 2014. So she's definitely earned her stripes on that side of things. She joins us from Vancouver. And Lucy, I will pass everything over to you now to take over.
No, thank you so much, Dave. You stole some of my facts, but it's always good to remember the importance of course, disability insurance. And today I wanted to raise the opportunity we find with medical students or professional students as well, because we're going through that time where they're graduating, they may be going into practice, they may be getting their first role, even going into residency. Now's the time to talk to them, and we created this program so that you can approach these clients before they're those established professionals and before we have those the higher competition. Typically, advisors, like Dave said, less than 10% do sell DI, and of course, everyone wants to have a high-income earning professional, and everyone wants to have a business owner. So this gives you an opportunity to set yourself apart, not only talking about disability insurance, but approaching these individuals who have that potential and becoming their advisor early on with that, of course, great opportunity moving forward. This product can start small depending on the year in schooling, but it has mass potential of growing without medical evidence, deep discounting, and great opportunity for you for not only feeling more comfortable having the conversation, but having a great established clients in the future. So of course, we're going to overview the student opportunity, establishing the need. How do we have this conversation? Of course, the salespeople, we love having objections. We love handling them. So making you feel comfortable just to have that conversation. And that's where myself and my team can come in and help you with the case consultation, the product itself, and even joint calls as well. So it's not so much about knowing all the products, knowing all the ins and outs. There's a lot of carriers. Disability insurance is what I've specialized in for a long time. Of course, on the life insurance side and critical illness side, the disability insurance I find is where RBC really stands out. Something I always want to note is we do have the highest issue and participation limits for certain specialists. We can go up to $35,000 tax-free and up to $40,000 on business overhead. So that, and we also have, of course, numerous products for business owners to choose from. And we really strive to be a one-stop shop for all of your clients. And of course, what is the Student Savings Program, the medical student offer, and then a couple case stories, and then next steps. So I really like this slide, actually. It gives a great content on the demographic and the profile of physicians in Canada. So in 2019, we did see the smallest single year of increase in physicians of 1.8% since 2007. However, as you can see, there's a 3% increase in the overall billings or payments made to these physicians. So that really correlates and shows the demand we have for these types of individuals, and also an increase in international graduates. That's also just showing how it is such a desirable occupation within Canada, and we have people coming from all over the world to practice in Canada. My favorite stat is since 2015, the number of female physicians has increased by 19.2%, whereas the males have increased by 5.8%. So as you can see at the bottom there, that it's very close male to female, but the female demographic is growing. And I know if we look at the traditional investment planning or financial planning, the traditional way is talking to the male about it. But now for those, it gives you an opportunity to talk to the female market and grow further there. And of course, when it comes to the average income, you know, $347,000 is the average income. Of course, as you can imagine, with family medicine, it's going to be a bit lower than this. So for specialists, and as I mentioned before, we do have the highest issue limits for the professional series and the business overhead. So typically those who work in the family medicine, we can expect they work for the hospital. They may not have that need for business overhead. So when we're looking at surgical specialists, there's a good chance, of course, they're going to have their clinic and have that need as well. So the Student Savings Program and the medical student offer has that solution available. So you can look at a holistic disability plan. This graph just highlights the overall income potential we have for these types of professionals. So like I mentioned, $347,000 is the average income we're seeing, but it can, of course, go significantly higher depending on the specialist and where we can find that opportunity. I'm not going to read through all of these, and you can see here that it just shows the different levels that we can offer. And the key reason why the medical student offer is so important is, like I mentioned, just setting yourself apart from the competition, establishing these clients early on in their career or prior to their career. And I'll get into the specifics in a little bit. A lot of people may think, how can we offer disability insurance to someone who doesn't have an income or someone who's not technically working? So that's why we have these programs, to be able to give you another tool in your tool belt. So, of course, we understand the need for disability insurance. How do we establish that to a young student? How do we show the value of disability insurance and how it pertains to them? I know it's a challenge, especially if, you know, working with a younger individual, being able to convince them that they need something. And there are going to be a lot of alternative approaches, whether it's from the association or from government protection. Of course, every province is different. So that's where we just have that conversation of the need for disability insurance, and Dave highlighted it perfectly. Of course, we saw the average income stream of $47,000 for these individuals, but $72,000 over close to $5 million over the course to age 65 if they became disabled today. The most valuable asset is your ability to earn your income. And I always want to emphasize that because people do tend to forget that. So it's not your house, it's not your car. In the event something happens, can you even afford those assets? Can you afford to take care of your family? A lot of people, especially these high income professionals, say, oh, I got lots in my investments, I have lots saved up, you know, I have rental properties, I don't need to worry about it. But then you have to ask that question, do you want to rely on those assets? And yourself as an advisor, it's a way of protecting your business in a way, especially if you work so hard on their portfolios. Over 30% are going to pull from those investments in the event of a disability. So how to have that conversation? Of course, telling them about the statistics isn't always going to shine through, or it may not be as effective. So it's just talking about signing them up when they're young and healthy. And what's very unique about the medical student offer is that it does not require financial and medical evidence, and we're giving them their best product, deep discount, and we're going to waive the premiums for 12 months, up to 12 months, depending on where they are. And that's how we allow this product to appease to these types of individuals. They don't have to pay for 12 months. And we do this because we understand schooling is not cheap. They are probably eating ramen every night. So they may have to decide between beer and ramen. So of course, the budget's not going to be there initially. So that's where we make it very easy, and they're busy. So we make it very easy to underwrite, just a few simple questions. The discount that carries forward for the entire life of the policy, and they just pay 1 month, and then we waive the rest. And those rates are guaranteed for life, or to age 65. So what's the likelihood of it happening to me? If it does happen, will it result in a major financial loss to me? So thank you for mentioning that, Dave. We do have a lot of great marketing material that helps to show the statistics, the probability of it happening, and the overall cost and burden it can have on the family. And thinking about those who are receiving a paycheck, what percentage of it are you distributing towards your basic living expenses? So when we look at budgeting a disability policy, we always like to look at 1 to 3% of your income to protect up to 70% tax-free. Depending, of course, it can vary based on that. And so when going into these conversations, I like to display the budget first. Of course, with disability insurance, people do shy away from it. 90% of advisors do shy away from it. It's complex. The underwriting can be challenging in the sense of how to have the conversation, and it's expensive. So with insurance, the price is what you pay for the value that you get. So there is a price for a reason. It's very different than other insurance. You can claim numerous times throughout your life. The rates will not change. Unfortunately, of course, with car insurance, the home insurance, you claim, the rates are going to go up. With disability insurance, the rates will not go up, and they're level. The plan is for you when you get back to work or you get better. A lot of people ask me, do you have a list of all the conditions that disability covers? Well, there isn't a list. It comes down to the definition of disability. which a professional series has the strongest definition. It has partial disability, it has residual disability, and it has what's called own occupation rider. So all these features protect them significantly for their life, gives them flexibility to transition back to work with a partial claim, or potentially work in another occupation if they can't do their specialized duties. So those are the key factors to consider. The benefits guaranteed without financial requirements, assuming on partial or total disability, and when it comes to what makes them eligible for a claim is an injury or illness preventing you from doing the important duties of your job. And that's it. So that is how you can qualify for a disability. And also this can range from significant amount of conditions. It comes down to what the client's doing for their work. And we want to make it as easy as possible for them to get back to work and protect their income and, of course, protect their family as a result. So millennials are defined as individuals ages 18 to 35. However, I want to explore how to connect with this group. The surveys suggest that less than half of millennials identify with that label, when compared to almost 58% and 79% of boomers that connect with their respective identities. So just getting to understand how we can have this conversation and how to make them see that value. Sorry, I laugh at this slide. Of course, there's a man bun. Reminds me of Yaletown in Vancouver. So the student concerns. So protecting your future earnings, of course. You're going to get that question, how can I get insurance to protect my income when I'm a student? So we're underwriting them now. We're giving them a benefit based on where they are in their schooling. And this product is going to grow without medical evidence in the future. And of course, when you're working with younger individuals, we're locking in a cheaper rate now than if you applied 10 years from now. And if you apply outside of this student savings program or medical student offer timeline, the underwriting requirements are going to be much different. So why not get you a policy now where you can get free premiums and it's going to be cheaper for life? We want to make it affordable for them now and reasonable for them now. And of course, I always jump to the next point, affordability, the discounting is key. The future income option rider, it's going to continue that 25%, up to 25% discount every time they exercise it, and yourself as an advisor will get compensated as if it's a brand new policy. Level premiums for life, that's key. So I know I really want to emphasize that the earlier you apply, not only is it the easier to underwrite, but the rates are going to be level and until they're age 65, and the policy is guaranteed renewable for life. They're going to approach you with these association coverages and say, why is this so much cheaper? So the price is what you pay for the value that you get with insurance policies. So that's where their policies are essentially cancelable. They've changed carriers recently. The rates can fluctuate at any point, and they're banded every 5 years. So when the client gets to the point of their insurability, they may not be insurable anymore. The rates and association coverage will be higher than if they just bought the policy initially, a more comprehensive policy. So typically the rates go higher than what they would have paid initially when they need the insurance the most, and the highest probability of them claiming. And ease of purchase. The medical student offer, not only does RBC have the highest issue limits, we have the highest non-med limits. So just talking in a general outside the medical student offer, we can go up to 8,000 for those who are 50 and younger without requiring meds. So that was increased from 6,000 due to COVID. I just also want to note with our life insurance, our Your Term product, we can fluctuate the years between 10 and 40 in increments of 1. We can go up to 2 million there as well. So we want to make it easy to underwrite these contracts. And I'm always here to help connect with the underwriters. If we want to build a case, it's more of a unique situation. And a lot of people may think, oh, they're brand new self-employed, we can't do anything. However, I always like to get creative with it. It's the insurance nerd in me. I like to find solutions to any situation, and happy to help you with that. I'm sure I give the underwriters a bit of a headache sometimes, but that's why we're here to help support you. Something I'm sorry, I didn't mention as well, I know this is national, so I am covering BC, and after this, I'm gonna reach out to my counterparts who will also contact you, whichever province that you're in, and be able to help support you, but they're all just as happy to help and partner with you. Is the key thing I always like to note. We want it to be a partnership. So how do we address these concerns I mentioned earlier and have that conversation with the client? Protecting future earnings. I gave it away, but for those, it's called Future Income Options. RBC, it has a great feature, even outside the student program. It's very flexible and easy to understand Future Income Option. Based on the occupation class, it's just going to be an annual option. So you can apply for $2,000 on the base, another $3,000 FIO. So they can increase their policy from $2,000 to $5,000 in 1 year without medical. Any discounts from the policy will also be included in the future income option. So that also motivates the clients that it's not only cheaper now, it's going to be cheaper in the future if you applied at a different time. Let's lock in your insurability. A lot of people say it won't happen to me because I'm young and healthy. Well, that's the perfect time to apply for insurance because you qualify. So the longer you wait, the more likely you're going to have maybe exclusions or limitations on your contract. So that's where you purchase it now, and then in the event that something happens, you know you're going to have a standard policy and it's going to really benefit you. 15 to 25% discount depending on the program. Non-cancelable. So this is where you're going to get those fun objections saying, here I was offered this through the association. The rates look great. I can add these riders or and things like that. So do you want to own the coverage with an individual plan, or do you want to rent it from an association? You don't. So sorry, I saw a question there. Thank you for that. So do you mind reading that out for me, Manpreet?
So question is, when they say non-medical, does this mean they wouldn't be looking at their medical situation?
So a great question. Thanks for that, Nico. So essentially, when I say non-medical, let's look outside the medical student offer because it's very unique. If we look at other applications, it doesn't mean we won't ask any medical questions. It just means that it's not an automatic requirement to order an APS or blood or urine or anything like that. We can go up to 8,000. The medical student offer, however, is very, very different, and I'll get into that shortly. So hopefully that helps. And ease of purchase, so limited underwriting at young ages. So 8,000 and under, we will require the medical questions. And yes, I meant for the MSO offer. Okay, perfect. So with the medical student offer, no, we will not. So it's a simplified application, just a few medical questions and then after that, the policy is standard. And the key one is there is a mental health question. If they answer yes to that, it just means we'll put on an exclusion for 5 years for the reconsideration after 5 years. Because mental health is actually accounts for over 40, well, close to 40% of our claims. So outside of that, we will not look at their medical background. And because this program is so unique and very generous in offering our best product without medical, then because of that, you do have to go through a short certification process with your sales consultant just to go over the specifics of the program. And before we can share you that with the applications, just because we need to ensure that there's programs utilized accordingly. So, and here I go, giving away the next slide, but their options: do nothing. Of course, as we know with any financial or insurance planning, that's where you're here to help them, and at least you're reaching out and having the conversation. All we ask is that you feel comfortable talking with them, and then we can come in, just ask the question. If a lot of people may say, I have group, I have government coverage, I have other individual coverage, I'm completely fine. So sometimes I find if you approach and say, well, actually there's this and that could be wrong with this, let me look at it. And I like to just ask, well, that's great, you're protected. Can you share a little bit more about your coverage? Oh, it covers 66% of my income. Well, is there a non-evidence maximum? Is there an overall maximum? Do you know the definitions of the contract? Can you share that with me? And of course, they most likely will not. And that's where you say, well, the least I can do, I want to do my due diligence and help you review this. And if you have great coverage, that's great. I'm happy that we looked at it and we ensured you're adequately protected. If not, are you open to doing a little review? I can take it to my my disability specialist to help me find a solution. Maybe it's more cost effective and so forth. Buy an association plan. Of course, they're going to be very competitive. They're always changing, but are you going to rent your coverage or own it? So that's something I always like to emphasize, because they changed carriers recently, they increased their rates recently. There's no control over the plan. And buy through another carrier. So RBC, this is our specialty, is disability insurance. We have a solution for everyone, whether it's from the professionals all the way down to a simplified injury only. Of course, I'm not going to say we're the best for every scenario. When it comes to established professionals, I know RBC's always been known for that. However, I find we're growing significantly in the blue collar market. However, another thing I always like to offer is we're happy to look at other quotes you received, see if RBC is a better fit. I always try to keep on top of what other carriers are doing. If RBC could be more competitive, and typically, of course, we do have our stance in the market, close to 60% market share in the non-cancelable solution, and growing in the guaranteed renewable solution. So that's considering all disability products. So we want what's best for your clients. All we ask is you just give us the opportunity to do a comparison and show you our solution.
Lucy, there is a question from Tariq. He's asking if we can share this presentation.
We should be able to, yeah. I can certainly double check, but we can share it as well. There's also a lot of great information on the medical student offer, client-friendly material, advisor-friendly material, but I can certainly share this as well, or at least ask. I'm sure we can, but I can ask. So thank you for that. So I know I've already gone into it with the medical student offer and the student savings program. The purpose of these programs are the same. I want to give you the opportunity to have these discussions with, look, another man bun. Is this what they think of millennials? So it just gives you that opportunity to have the conversation early on, acquire that client when they're young and healthy, have discounts for the future, and you've approached this client before any other advisors. You talked about something that less than 10% of advisors talk about, and you've done your part that, you know, when they are earning this high income, they're going to reach out to you and maybe look at investment savings, or maybe other form of financial planning needs when they look at having children, RESP, and then going into the future. I know a lot of advisors may tell me, all my clients are older, they don't need disability insurance. Then here's the opportunity to ask about their kids. So there's so many different types of occupations we can cover. So the student savings program. So here's a screenshot. We cover a lot of different occupations. They can range, you know, for example, even carpenters, apprenticeship program. The engineering student offer is another great solution for those who are going into their Canadian internship or co-op. It also is simplified underwriting. So this just highlights why RBC is #1 in the disability market. The student savings program is a great solution, especially during the summer. And that's the reason for the timing of this program is the reason for the timing is because a lot of them are now going into residency. If they're a medical student, they may be going into practice. They're not currently studying, so it gives you a good opportunity to talk to them. And also, when it comes to the medical student offer, the timing is end of September before we have to forego the special underwriting or the simplified underwriting if they have recently graduated and are going into practice. So the timing is very specific. So here's another example. Depending on the occupation, it does range on how much we can offer and where they are in their education or year in education, and the discount also varies based on that solution. But you'll see that this is without financial evidence, I would like to note. Sometimes we have someone who is going into their first year of practice. Let's look at maybe a pharmacist. They got a job offer letter showing $100,000. We can submit the employment letter, ask them to underwrite based on $100,000 of income, get $5,200 of benefits. If they're within their first 6 months of graduating, we'll give them 5 months rate premiums and a 25% discount. So the student business overhead, I really like this, and I find it isn't explored enough, even for advisors who do sell disability insurance, not just with the student program, but in general. It gives you that additional tool, especially when you're working with business owners who write off a lot through their corporation. We look at their net income and any T4 they pay themselves. So if they write off a lot, but their income needs or disability needs is higher than what they qualify for, the business overhead is a great complement. Typically with individual disability, we do a 90-day waiting period. But with the business overhead, we typically do a 30-day waiting period. So it gives you that opportunity to have that layering. After 30 days, we're going to cover your business expenses. This plan also has the premiums that you can write them off to the corporation, which all business owners like to hear. And then after 90 days, we're going to give them a tax-free benefit to protect their personal income needs. So that's why they're a perfect complement. You apply for them within the same application. It's just another check of the box. So it's very ideal. And newly self-employed or new business owners is a great solution. In the event, of course, things change. Maybe they don't have the business overhead need. Maybe the business gets too big, or maybe a lot of people decided to shut their business or let go of their leases, and now they're working from home or operating from home. We can convert it without medical to a personal disability plan with a 30-day waiting period and 2-year benefit period, as long as they just provide financial evidence. So I just always like to know on the overall solution of this product, when it comes to the student savings program, they're going to have the business overhead need in the future, but they don't have it now. So what if something happens to them before they open their business? So the business overhead program for students, we're going to help pay down their student debt. So depending on how much business overhead they purchase, we can pay 25% of what they purchase up to $500. So I know sometimes people would think, well, if I'm paying for $1,000, why would you only give me $250 towards my student loans? Of course, take into consideration this is based on their actual business loan debt, which typically is around $500 a month. So that's where, although it's a 24-month benefit period, you can think of it as like a pool of funds. So $24,000, let's put $1,000 because I need easy math right now. $24,000, as long as they meet the definition of disability, it will extend past that 24-month period until that $24,000 pool is used up. So they're not losing any benefits. But as soon as they go into practice, this plan is now a traditional business overhead plan. And similar to the future income option, there's a future business covered expense option, meaning that they can increase their business overhead policy without medical evidence. As their income grows and their needs grow, they may only apply for a small amount now, but they have the ability to increase it significantly over time. And compensation carries forward with that as well. So there is the discount that carries forward, which is extremely useful, especially in the future. And then this grows with their individual income protection. So there's so many different opportunities for you, especially when we compare these together. So the student savings program also comes with a critical illness. So of course, another thing, sometimes people think critical illness or disability insurance, either or, not both. They similar to individual DI and business overhead, critical illness and disability are designed to complement each other as well. In the event someone suffers a critical illness and they can't work, they'll still get both benefits. They're completely separate needs. But they, of course, is going to be a crossover of conditions that they cover, but with disability covering more, and then also giving them the ability to go back to work and have that policy moving forward with them. So with the medical student offer, we're also going to offer a 2-age 75 non-cancelable contract without medical evidence, up to $100,000. So it's very generous that way as well. So now we're going into the medical student offer. I know I bounce back and forth between the two solutions, but they do have the same purpose. The medical student offer, we're going to offer the simplified underwriting. Outside of that, the overall concept is giving you the same great conversation to have and future potential with these clients. Because medical students or medical doctors are such a great market, we are, and with the aggression of the association plan, we wanted to be able to stand out from the crowd and give them something more comprehensive and without any medical evidence. So I'm going to emphasize as well, before we can have you sell these contracts, we do involve a certification process with myself or one of my counterparts. So eligibility. So any student enrolled in a recognized Canadian medical school in residency or fellowship. So as soon as someone goes beyond, say that they're graduating now or in this summer, and they're now in practice, and it's past September 30th or 3 months post-graduation, it then transitions to the student savings program, and all that really means is they now have to go through all the medical questions. So that's why the timing is so important to offer this very unique program, because it's up to September 30th or 3 months post-graduation and going into practice that we can offer the simplified underwriting. The discount's still going to be there and the same limits are still going to be there. It's just going to involve a longer application. So another thing is some people say, well, I can get the simplified underwriting up till the September 30th. Why would I apply first-year medical students? So the key couple things is I always like to mention is you're going to get 12 months waived premiums as a medical student versus 5 months waived premiums as a resident. The key as well is a question on mental health. The longer they're in medical school, and of course, understandably so, if they had to seek treatment for mental health or is diagnosed with any mental health, including depression or burnout, anxiety, then we're going to put a 5-year exclusion on with a reconsideration after 5 years mental health exclusion. So that's where I like to have that conversation similar to any insurance. Let's apply where we're not going to answer yes to any of these questions and you're more insurable. And then here are the limits for the medical students. So as you can see here, it grows similar to the student savings program because we understand the further they are in their education, it's a lower risk RBC for them to maybe us offer a non-cancelable contract, and then they decide to drop out and do something that's a higher risk on a disability insurance, since it's non-cancelable and guaranteed renewable, once it's in place, RBC cannot do anything to the contract. So that's, which is what's great about it. There's that portability, guarantees on the benefit, discount rates, riders, and they'll still have that insurability growth in the future. So that's where we have lower limits, and then they increase over time. So what's really unique about the medical student offer, not only with the simplified underwriting, but there's a one-time extra contractual future income option. It's a mouthful, where basically they can jump to the first year in practice limits within that specific timeline of 6 months prior to graduation to 6 months after. Without medical, without financial, the discount. So they can have as low as, say, $500 a month of benefit. Say they become a specialist, you can go up to $11,000. Okay, so I see another question here. So it's always nice to stop, and I appreciate all the questions. This is great. So from Ling, what about international medical students? Is there any degree required? So that's a great question. So with the medical student offer, it is recognized Canadian medical schools. When it comes to international students, as soon as they come to Canada, they do have to get recertified to practice. So as soon as they are recertified, we have an international student program. Although we can't offer the simplified underwriting, we can still offer up to our maximum first year in practice limits and offer a professional series. And this is one of the few occupations where we don't even require a PR status. So we can offer a 15% discount and our max limits just with medical underwriting. So that's when it goes under the student savings program. So thank you for that question. And here I am talking about the special increase because it's a really exciting feature where we can jump up the benefits significantly. So some people want to keep the cost really low early on, say $500 of benefit, and the future income option rider. Not only can they jump up the benefits significantly without medical or financial within this timeline, they can also add riders such as own occupation or COLA and customize it a little bit. And that's another reason why we want to go through the certification program. There's a lot of ins and outs, but the timeline is very specific, and we've had situations, unfortunately, where they miss the timeline and they may only have $500 of benefit with a small FIO, and then it goes back to kind of a regular options every year. So the critical illness. And I know I mentioned this before, but it's something that I always like to repeat because of the great value that it has. So the client, we're offering our most comprehensive critical illness plan as well. It has long-term care conversion between 55 and 65, as well as our disability plan. And we're offering it without medical evidence and on the same application of the disability insurance. So it's they can go from 50 up to 100,000, non-cancelable, to age 75. So it's a great solution there. There won't be discount or premium waiver, but there's no medical underwriting, and we're locking in their insurability as well. If they have a higher need for critical illness in the future, of course, they can just do a fully underwritten policy. But $100,000 of a to age 75 non-cancelable plan is very generous as well. So the Retirement Protector, this is a bit of a newer feature since 2018. So it's this is something that can be added as a rider or a standalone policy. So with the medical student offer, it will be a standalone plan. So that's where essentially it's giving them up to an additional $1,500 per month tax-free so that they can still contribute to their retirement savings in the event of a disability. So the great benefit for yourself as an advisor, especially if you like to work in investments, and you can understand that once this person's income grows, of course the disability insurance income need grows, but we still see the value of contributing to the retirement savings. So because this this disability benefit will stop at age 65, they're still going to want to have that retirement savings to fall back on. And this allows them to still contribute to this additional tax-free benefit that they can contribute how they like. So, we in 2015 we created this infographic. It's Canadians off work due to disability face a perfect storm. We saw that 78% of Canadians said finances were tight when off work, understandably so. 76% also said it was too stressful for the entire household, and the consequences were that 20% dipped in their savings to pay for expenses, 17% took on more debt, and 9% cashed in their RRSPs. So especially if there is a high need to protect their income, they may have a very lavish lifestyle. Don't blame them. They studied very hard for that income. We still need to emphasize the importance of continuing for their retirement, especially if it's a very long-term disability or permanent disability. So let's go into case studies, just some examples of where this can fit. So Adam is in his final year of accounting at university. He plans to return to hometown and open his own practice. He has incurred some student debt and is worried about paying it back should something happen. So surprise, surprise, the student savings program is a great fit. We can offer, he's now in his final year of accounting, so we can offer the first year of practice now that he's going into his own practice without financial evidence. But say with an accountant who wants to start a role as an associate or as an employee, and he has that employment contract, he's been offered an income. We can request a higher amount than the non-financial limits on the student savings program and still get the waived premiums and the discount. And of course, going back to the student business overhead, this is a great fit because in the end, this is going to protect his student loans or student debt. In this situation, he is opening his own practice, so he's going to have to acquire, start a lease for a building, have those utilities. Maybe there's going to be some fees. Yes, of course, he has to pay to become established. So there's a lot to account for in that. And now the student business overhead is going to carry over to a traditional product that's going to cover his overhead. And this is just highlighting, of course, the occupations, again, really like to focus on how many solutions there are, how there's going to be an immense need for these types of clients, and giving you that opportunity to, if you work with older clients, ask them if their kids are in university, explain the great solution we have, and being able to now acquire their children as clients. And have that being able to support the generation, especially if you've worked really hard with this client and the children most likely are the beneficiaries. So being able to protect them for and protect investments with your client as well. So there is the simplified application. There's the DI-CI app for the medical student offer. There's DI only. There's an engineering student offer I didn't touch today, but it's a very similar concept for those in their final year going into Canadian co-op program. We can offer $8,500, 8 months waived premiums, and simplified underwriting. Oh, sorry, $3,500, 8 months waived premiums, 25% discount, simplified underwriting. So that's another great option as well. There is the future income option rider. Or application, I should say, in the event that they want to do that special increase, of course, when they go into practice. So it's on our sales resource center, which I always recommend saving. There's no login required because I'm sure none of us forget passwords, right? So it's very accessible, has everything you need there. We'll follow up with an email, of course, with these documents, and your team will follow up, your RBC team, who are fantastic. And then this application accounts for the special increase as well as any regular increase that has a special spot for medical students. Say, for example, on the regular FIO, so the regular annual option, the letter that they receive will be very specific to their policy. There is also long-term care conversion, 55 to 65 on our CI and DI plans. And the next steps, basically summarizing it, is contact us. That's why we're here. We're happy to help. Whether it's meet with your clients, whether it's just case consultations, whether it's going through products, don't need to know all of it. We're here to help you with that. So thank you. That's what I had, and I ended on time. So I'm a bit of that's a surprise because I'm a bit of a chatterbox. So give you some time back to your day.
Yeah, that's great, Lucy. Obviously, a lot of information there. I think that there's no question that there's many opportunities that our advisors have, whether it be your, in the student medical program or in some of the other programs that you guys are offering for any of the students. I think, one thing that I've come to realize over the years is, we as advisors are become quite accustomed to crash testing a client's plan. We try and be as respectful as we can when we're going through that process with them. And, what we identify quite quickly is, of course, there is no plan. We know that, there's many different products that they have out there. And there's, like you mentioned, a few different things out there, which is like association plans and everything else, which there are some very good ones out there, of course. But it is a contract sport. And I think that when we look at a non-CAN contract, of course, that, we've discussed today, obviously that does come with the seat belts and the airbags that you've mentioned today. Some of my takeaways from this are, you mentioned group benefits, and that might be something that some of these individuals feel that they're going to have access to. Of course, you mentioned 66% of their income. And, no disrespect to these individuals. I think that, we deal with a number of clients of ours that are not making it on 100% of their income, quite honestly. And, if they were to be faced with the reality of going down to 66.7% or whatever it is, that I feel would have a tremendous impact on the family and their ability to afford their lifestyle. So that's obviously what we want to try and avoid with them. Some of the other takeaways, and again, I might be wrong, but I do believe that discount is obviously common with some of them. However, the waiver of premiums, the 5 months up to 12 months potentially, that is a differentiator, I feel, and correct me if I'm wrong, but I do believe that's an RBC thing that none of the others are out there offering. Also, you mentioned retirement protector, and I think that's one of the other things that gets overlooked a lot of the times, when we're having our planning meetings with our clients. And, what a wonderful way for us to gross up someone's monthly benefit. What we understand is that when someone does become disabled, obviously there's many, many things in the plan that get cut, and retirement should not be one of them. The opportunity of claiming is quite high, but the duration of that disability is relatively low. Normally, some people, most people are back to work within, once it's gone to the 91st day, I believe it's like average is about 3.1 years. So last thing we want is obviously for anyone's plan to be affected for that period of time. And obviously, there's no guarantee that they're ever going to come back to 100% ever again. So lots of great stuff here. I'm so happy that you were able to be on the call today with us. And, I know that I'm sure that there's a lot of questions that are going to continue to come through. If there are, please take them offline. Reach out to your business development executives at IDC WorldSource. Of course, I'm here in Ontario, but if you don't know who they are, of course, you can reach out to myself. And of course, there's nobody better than your RBC wholesalers in your given provinces too, as well. So lots of stuff. So if we don't have, I don't think we're going to finish a little bit early here, but thanks for your time. And Manpreet, again, I know you've been fielding a lot of the questions there and helping us along with the presentation as well. But yeah, appreciate everyone's time and hope everyone has a great day.
Not a problem. Thank you, Dave.
Thank you, everyone.
Thank you, everyone.
All right, take care.